Okay. Hello. Hope everybody is having an amazing day. How is it already May? Oh, I was supposed to say something. Um, May the 4th be with you. Hopefully you know what that means. If you don't, then we need to get together and have a movie night. I'm getting a lot of calls about what's taking place with charging the higher credit score people higher interest rates than lower credit score people. So if you stay tuned, we're actually going to talk about that, and then I will have a cheat sheet for some of you if you wish to have it. There's so much misinformation out there. It was crazy. I had one of you sent to me like a TikTok or Instagram video, and I was just, my mouth was open because of it was not accurate. So let's cover that, okay? So let's talk 100% financing, and what's available for that for you guys. There's more than what I'm covering today. I'm only going to cover these three little ones here, but I want to make sure that as we go through here, please ask questions. You will get so much more. And I guarantee you, if you have the questions, someone else will have it. I will, make sure that we can get that answer for you. Okay. So we're going to talk first USDA. So USDA is a great program. And some of you might go, I don't have USDA in my area. You'd be surprised where some of the USDA areas are. And I'm going to give you a tool after I get done talking about USDA that's going to allow you to go and look up the areas as well as look up the income. You might be surprised, right? A few years ago, we were talking about income of like 50,000 or 60,000. There's some areas now where the income's like 110,000. And then there's some areas where people might be surprised of, wait a minute, that's a USDA area. A prime example, I have people on here that are Florida and Georgia and North Carolina. But, if you're Georgia and you know where Bartow is, Cartersville, a lot of times people are surprised that a lot of that is USDA. Okay. So yes, it is more rural areas, and they readjust that map. Okay. As they're adjusting the map, some might be added, but then some might be taken away. Some areas might be taken away from the map. So whenever you're thinking about showing this to your customers, your clients, you want to go and see, is it part of it or is it not? And if it is, then it could very well be a better program for them. And that is something I discuss with them in great length before they start looking with you, so that they know their options. And it is good if somebody's maybe on the border, maybe they are really close to USDA, but they're also looking in areas where maybe it's not. Make sure that client of yours has more than just one approval. Go ahead and let's get the USDA, maybe FHA or USDA and a conventional. As many of you know, I a lot of times issue two. If it's better for them to be FHA, I will issue FHA and conventional for them, depending upon the market they're in and what they're trying to achieve. So same with USDA. If you're just solid in that USDA area, then don't worry about it. Okay. And the income limits, like I said, have changed. So don't assume that it's 40,000 or 50,000. And since I was using that Bartow as an example, I went in this morning and I put in a single person as well as a family of four. So two people with two children, and it came up 110,000, a little bit more than that. So that really opens that up to individuals to be able to afford to use USDA, because they were having to not be able to use USDA to maximize their purchase. And that is opening that window just a little bit more and allowing people to take advantage of this. Eligible properties, all kinds. Okay. So that's going to be, your You're going to have your houses, your condos. I don't really see many condos, although in some of these rural areas, they're trying to put some condos in there. So we're beginning to see some of that coming up. So don't think just because it's a condo that they can't purchase that condo. They could, absolutely. Manufactured, mobile, modular. We're definitely going to see some of that there. It becomes more common in the rural areas that they're putting those properties there. We just really want to have a talk about what the property is, what does it look like. We want to make sure that that property is is a good property, right? We're not going in and seeing holes in the wall and you can see down to the basement. I had someone almost trip and fall to the basement. I know that's a concern for you guys. So you want to make sure it is a very good property for them to be purchasing. Not, I don't mean what you guys know I refer to as the Pepto house, right? Not the pink house. That's fine. We're talking more structural issues, more, problems with the actual property itself. That's what we're going to avoid here. Okay. Who's eligible? These borrowers are going to typically, we're looking at 640 credit scores or higher to get it to approve. So not necessarily the much lower scores, but 640 is a great score, and then higher. No down payment. Let's just keep saying that. No down payment. No down payment. And so that beats FHA all day long. That beats conventional all day long for these buyers. And I agree, it's this little area, unless you happen to be in a big area. I have some agents where their entire area is USDA. So depending upon where the property is, take a peek and see, know where you are. I've seen agents pushing farther and farther out of metropolitan areas because the inventory is so tight, right? So as they begin to push a little farther out, we're seeing that they're entering USDA. But no, every year, please take a look, because as more and more people push out, we may end up seeing that transition, and then now it's not eligible. The property area is not eligible. Okay. What are the advantages here? The advantages to this is basically you're going to pay a lower funding fee than you're going to pay for FHA. You're going to be 100% financing, so no down payment. Sellers can contribute towards closing costs, and it is a great way for that borrower to get in. What we do have to keep in mind is the debt ratios are going to be much lower. So I might come back and say, hey, they could buy 150,000 using USDA, but they could buy 225,000 with FHA. And what would be causing that would be the debt ratio. And so definitely have that conversation with me. I have it with your client in advance so that they understand each and every one of them and which one's going to be right for you. I want to make sure you have any questions, please ask, because I guarantee you someone else has the question as well. But the challenges with USDA is a little slower. It's a little slower, right? But those areas, they are used to receiving a contract with USDA. You're not surprising them, right? This is something those agents are very accustomed to in those areas, and they know the borrower wants to go that way because they're getting a lower funding fee than they're going to get with FHA. Not only upfront lower funding fee, but monthly lower funding fee. And I know a lot of you saw that the funding fee came down for FHA. This is still lower than that. That's crazy, right? So that allows them to increase their purchase price. So because they can increase their purchase price, that helps them. But we do have the disadvantage of the lower fees we have the lower debt ratios, excuse me. So because the debt ratios are lower, typically 29-41, maybe 30-42. We're not going to push it much beyond that sometimes for these programs. So with that being said, FHA, a lot of times we can push it to, 50, 46, 55. So you can see 29-41 versus 46-55 is huge differences, especially if for some reason maybe we're not putting somebody on the loan who can't be on the loan. It could really decrease what they can afford to buy. So any questions, please ask. It is a good program. I love it. I think it really helps our first time buyers a lot. And so as promised, if you have your phone and you want to click on this right here, this is going to take you to the eligibility. So not only for the property, but also for the income. Thought that might be kind of handy for you guys versus having to type it in. So with that, you can go in and put in what is the income for Bartow? What is the income for whichever county you're wanting to look at? Then you'll put in how many adults and children live in the home, and then you'll break that out in there. Even if you don't know your borrower's income, it's okay. Put in a fake number in there, right? And a lot of times you may or may not know their income. But if you're talking to somebody and they want USDA and this person's making $200,000 a year, then this program's not what they're looking for. Okay, this is definitely not it. So make sure you have any questions, please post them. Happy to get them answered for you. Some of you have been around doing USDA loans for quite some time. But if you also have questions, you not only can post them here, but reach out to me. Let me know, okay? Let me also go to the next one. As most of you know, I love VA. Absolutely love VA. And also, just in case, you can open your question and answer window. When you open it, then you can post something to it. There is something like, I think it's like 20 million veterans. So it is a program you really do need to know. And there's bases all over Florida, Georgia, pretty much everywhere we have bases. But not only active individuals, we have individuals who are disabled veterans, retired veterans. Maybe they served 4 years, maybe they served 20 years, maybe they're still in, and you're near a base. I think knowing this information we're going to cover right now would not only help you if you have a listing and understanding that, and why please accept the offer. It's a great, great program for these individuals who served our country. But also, if you're working with veterans or you get a veteran, the last thing we want to do is push them into a different program unless they absolutely have to. This is the best program for them. I literally was talking to a veteran about 5 minutes before this started, and this is going to be their third house that they buy using their VA, but they're looking at over $800,000. And that is not considered a jumbo. They can do that with VA, okay? Let me take a look here. I'm going to stop for just a second. I know you said the sellers contribute, but what if they don't? How does USDA help with closing costs? Right now, we don't have anything for USDA with them helping with the closing costs if the sellers aren't contributing. What I always recommend to individuals, and I have this conversation before we send this approval, and this covers all programs, not just USDA, VA, and the 100% we're talking about, but especially these programs we're talking about right now, is because this might be someone who only has this much cash, right? This is someone who has very, very little money, and we need to be very cognizant of that as we're trying to help them. So the first thing I do when I'm discussing options with these individuals is not to discourage them from purchasing a home, but definitely encourage them to move forward. But let's be realistic about how much money we have and what type of home we should be looking at. So what I mean by that is I had this conversation this morning with a client, and the client wanted to, they had barely enough for their down payment. The price range they were looking in, some of these programs we're talking about right now, they didn't fit in. But they wanted to look at a home that had only been on the market a few hours. So my very first comment is, hey, remember our conversation about looking at properties that have been on the market for a minute, not properties that are on the market for an hour or a week, and they have multiple offers. And yes, some of you might be sitting here going, hey, that's the market I'm in, right? And if it is, it is what it is. But they need to understand that if there's multiple offers and they are writing it and they cannot cover closing costs, and it is a brand new house on the market, then that's probably not the home they need to rush out and look at, right? But we can't not show them. But they need to understand you are setting yourself up for that heartbreak. We don't want the heartbreak, okay? How is USDA considered 100% financing? That is because there is no down payment. There is no down payment for USDA. All they need is their closing costs. And in those areas, more often than not, literally more often than not, the seller pays them or pays a large portion of them. Still, at the same time, when that approval is given, I'm discussing with them that they need to understand there are fees that they're going to pay, right? You're going to ask them for earnest money. You're going to ask them for an inspection if they want an inspection. We are definitely going to ask them to have an appraisal. So somebody coming to me with $250, I'm definitely going to be discussing with them, where are those funds in order for you to even write the contract with your agent? Where are they coming from? So one of mine that went under contract yesterday, mom and dad paid the earnest money, but we knew in advance mom and dad was going to pay the earnest money. So the gift conversation already took place, right? So if they didn't have the money, we were discussing in advance, where is this coming from? What you don't want to do is be surprised. You wrote the contract and now they're sitting there saying, well, what do you mean I need earnest money in the next 2 days? We don't want them out doing that, right? If I'm sending out that approval, it's telling them how much money they're going to need. There's no surprise here. And my recommendation of, you're looking at 300,000, that's probably, you're going to need to put down $3,000 in earnest money, most likely. You know, your agent's going to direct you there, not me, but you'll need an inspection, and then you'll also need an appraisal done. So I'm looking to see those funds before I put them in the car with you. Let me see here. I have one more question. What is the greatest benefit for the veteran who uses the VA loan? My son is military, coming back from Japan. Oh, I'm jealous. I want to go to Japan. And is planning to purchase a home. Okay, well then let's get into VA, okay? Let's definitely start covering this VA for you, okay? So who is eligible for these loans, okay? The person who's going to be eligible is, they might be a veteran serving now. They might have served before. They may have served in one of the wars that have happened. They might, unfortunately, and the see my face will probably turn red here because I cry when I get these calls, they might be the spouse of the veteran who died in a war, okay? What they aren't, and I get this call all the time, my dad served and I'm his child, so I should be able to use his benefit. No, no. No. I also get this one all the time. I want to buy a home with my significant other, my girlfriend, my boyfriend, my fiance, whatever the case may be. My next question is, are both of you veterans? If the answer is no, then the answer is no. So it is the veteran and their spouse, or maybe it is the spouse of a veteran who is serving and died while serving. Okay, that's who this is going to be for. Okay. Um, Eligible property types. The eligible property types that we have are going to be houses, condos, duplexes, triplexes, quads. Now you start getting into, like most of you know, I preach the FHA, buy your first house as a quad or a duplex using FHA. You can also do it with VA. You need more assets. So if you end up with one of those, let's have a longer conversation, but they can buy an owner occupied, not investment. I get that call a lot. I want to go buy an investment property using my VA benefits. No, this is for owner occupied properties that you're going to live in for at least a year. There are exceptions to that. Maybe they're serving, let's say, in California, and now they're being relocated to Florida, right? We saw a huge shift of that on all those people in Norfolk, Virginia being moved down to Florida because the aircraft carriers were being repositioned down there, right? So same thing, you could use it again and it had not been a year. They're relocating that family, they're going to give them another loan. So we're going to cover that as well. What are the maximum loans available for VA? Well, the great news is VA has recently changed its maximums. It's now allowing people to purchase homes for $1.5 million, $2.5 million. So veterans, you might get someone who you're showing $2 million houses to, and they're going to ask you to use their VA funding. Okay, because this is amazing, because they aren't going to have that mortgage insurance monthly that they would maybe have on a jumbo. They're definitely not going to get stuck with the jumbo pricing and rates. They're not going to have to put down 20 or 30% like jumbo, maybe 5, maybe none. And I cover those numbers with them. So it's an amazing program. And some of you on this call are in a higher priced area. 5, 6, 7, 800,000. The one I closed yesterday was 625,000. They didn't put anything down. Nothing, zero. They just had to bring in their closing costs that the sellers didn't pay for. But sellers can pay up to 4% of their closing costs. So we do try to get the sellers to pay the closing costs if we can get them to pay it. So there's not necessarily a maximum loan, okay? But I want to say this. They are lied to frequently, unfortunately, and it's typically with a loan officer who doesn't understand VA. And it's sad when it happens. They tell them, you know, oh, you've used your benefit, you can't use it again. Or you're departing a VA house, you're not selling it, you can't use it again. That's absolutely not correct. I currently own 2 VA houses myself. And so they can not only use it over and over and over. I think I'm at 5 or 6 times so far. But they can also have multiple houses at one time. Now, where I said maybe it's $1.5 million, they don't even need a down payment. Those rules don't apply if you already have a home. We will do a calculation with them and they are aware of it. And we go through that calculation together. Let's see here. Let me just cover 2 quick questions. Do you add the VA funding fee to the loan? The VA funding fee is added on top of the loan. They do not have to bring that to closing. And it is actually something sellers can pay for as part of closing costs if that ends up being the case. And the funding fee for disabled veterans is also going to be free. So I haven't paid a funding fee. I mean, I'm sad that he is disabled, but I don't have to pay funding fees. So you guys jumped to funding fees. I'm going to go ahead and jump on here. So we can very clearly see the advantages here. The other advantage we haven't even talked about is typically the VA interest rates are going to beat conventional. No, I'm just going to say they are. I'm just going to say they are. Not only that, they're going to typically they beat FHA and USDA. So that funding fee and interest rates, and if they're disabled, no, there isn't any loan program that can touch that, right? Because there is no funding fee at all. So that means no monthly mortgage insurance. So somebody who conventional may get tapped out at, say, 400,000, a veteran might be more like 500, 550. And so as the prices keep rising in certain areas, you want your veteran to use that benefit to keep their payment lower, but also maximize how much they can afford to purchase. And sometimes we close those. The one that we were just discussing, I just closed, was a 60% debt ratio. I'm not saying we always want to push that debt ratio to that extreme, but sometimes maybe there's a compensating factor of why I feel comfortable, the veteran feels comfortable. Maybe there's someone else in living with them that's helping them, but we can't put them on the loan. Or maybe they have a side gig and they haven't had it long enough. Maybe we can't put that on the loan. The other item I want to talk about is advantage here. We've talked about many advantages, right? It is a much lower payment than anything else you're going to get. And anything, they cannot get a lower payment anywhere else. But another advantage, and this is a positive, not a negative. If you are turning in an offer to the listing agent, you definitely want your lender, especially if they understand VA, to pick up the phone, give them a call, and explain why they need to take the offer, especially if they're going up against an FHA. VA should be accepted before FHA is accepted. And I know what you're all going to say. They're harder on the appraisals. Well, if you're showing a $600,000 house and it is a beautiful house, stop worrying. Stop worrying. That's not the issue here, right? When they go out and they look at these houses, they're looking for houses with problems. If you're selling a home without a lot of problems or any problems, then this should not be a concern. What I love about the VA versus the FHA, and this is what I tell the listing agents, and if you're a listing agent on here, I'm sharing this with you, is the Tidewater process. I've had agents go, oh, Tidewater. No, you should be excited it's a Tidewater. What is a Tidewater? Well, that appraiser, and if you think about conventional and FHA, they just send the appraisal, period. Here it is. Here's the value. We're done. This is it, right? That's not the case with VA. They're going to send us a notice. We have 3 days to reach out to the listing agent, the selling agent, and say, hey, where did you come up with the comps? How did you come up with this value? Could you send them to me? Could you send me 3 of them? And I know everybody on this training right now is sitting here going, well, we can't do that with conventional. We can't do that with FHA. They just send it and then up, here it is. It's low. VA wants the veteran in that house. They want them there. So they're working with you to make that happen. And I have had Tidewaters, actually quite a few, where we gave the comps over and the appraiser was either there or very close to there. And I know it made a difference. So don't be concerned if you receive a Tidewater. Plus, if you're writing an offer and you see there are no comps in that area, yes, values escalating. I get it. Short inventory. I get it. I promise it. I've been doing this 30 years. I understand. But if you see that the next comp that even sold anywhere near there is $50,000, $60,000, $70,000 off, then you can bet VA is going to come in low. But not only VA, we're seeing the pushback from conventional. We're seeing it from FHA, not in all areas. So do not assume I'm saying all areas. I'm saying we've begun to see it. And that's because I do work in a lot of different areas as well. So that Tidewater is a great thing. I'm also going to answer this question here, but I also want to put this up. Documents required. I say we keep it simple. And if you're working with me, you already know that. I love to keep it simple as much as possible. I don't want anything extra than what I need. VA though, I'm collecting a DD 214. And in the 30 years I've been doing this, I think I've had 3 that didn't have their DD 214. It's just something they keep. They know they need it. They keep it. It's not an issue whatsoever. If you are W-2, I don't want tax returns. Your salary, I'm taking the pay stub, the W-2s, and the bank statements. Let's call this a day, okay? We don't want to ask for anything more than what we need. Let's keep it very simple so it's a nice, clean file when we're going in. So we go in and we come back out nice and easy, okay? What about a retired deceased spouse? Can you still use the VA loan? Sometimes you're not going to like my answer. Sometimes yes, sometimes no. So what they need to do, and I'll help them with it if they need it, they need to go to the Veterans Administration and see if it's transferable to them. So if it's transferable to them, they sure can use it. Okay. And they should use it, especially, I did one recently. They had Agent Orange, right? So that had transferred to the spouse, because that was something they got during the war. Okay. So next up, unless you have any more questions, if you do, post them, we'll come back and talk about it. Chenoa. And a lot of you want to know about Chenoa. Here's my thoughts on this, and I'm going to cover it. I like it, and I'm going to tell you why I like it. I like it because there are people who cannot save for a down payment, one reason or another. That doesn't mean they shouldn't be homeowners. That does not mean that at all. Imagine if instead of renting 3 years ago, they'd have bought a home 3 years ago in Cobb County using this amount, or Tampa or Duval or whatever, and you bought a home using Chenoa. Where would that value be today? Where would it be today? So we don't want to discourage, and we don't want to, I never judge, right? What is it? I went to the store and I literally just paid $10 for 18 eggs, right? Luckily for me, my 5 children are out of the house. But if they were in the house, I mean, how hard would that be to be saving up money in addition to everything else you're trying to do with your children? So this affords them to get into a home. Does it have pros and cons? It does. The program, and you've heard me say it, it's only FHA, only FHA, only FHA, only FHA, right? Some of you, I've said, that's all we have. That's all they have. They only have the one program now. They got rid of everything. They have just came out in the last couple of days. In fact, I'm attending a training on it on the 9th, where we're now going to offer coming back is conventional programs with this. So I'll be doing a deep dive or sending anything out to anybody who wants on it. But the program itself is, they're getting 5%. Okay. That instead of, maybe they got a down payment assistance program like George Dream, where they're going to get $10,000. You have to pay that back, by the way. This is, so somebody who, say, is looking at 100,000, and some of you are snickering, so stop snickering. I do make it, and those houses are 100,000. I have 2 of them right now, and they're getting a garage with that. So George Dream might be better for them. So I'm always looking at that for your clients. But maybe they're buying, downtown Atlanta, and it's 400,000. They're going to get 20,000 for this program. So yes, then it might be better for them. And we cover that together when I'm speaking to your clients. Now, the first thing all of you want, probably, Tamara, is the interest rates are higher. Absolutely. Interest rates are higher. Yes. Chenoa sets them We don't set them. Whatever their rate is for the day, that's their rate for the day. There's no going around it. But again, go back to, instead of discouraging people, if they'd have bought that home 3 years ago, and I've had people call me, well, I was told not to do it. Well, who told you that? My agent told me not to do it. I'm like, okay, well, it's 3 years later, and the area you were looking at is now $100,000 more, right? So if this is what they need to get into a home, then this is what I'm going to discuss with them and make sure they understand it. So they will receive 5% and they're going to pay that back over 10 years. So how is that different from a lot of down payment assistance programs? Most down payment assistance programs, you only pay it back when you sell the home, refinance the home, or you turn the home into an investment. So that's something to know up front. Some people want to own investment properties now, which is why we're also short of inventory. But this one is not that case. They are going to pay it over 10 years. And the conversation I have with them is, on that second, for the 5%, I want you to escalate that. You know, if you're comfortable with this, could you be comfortable with that? And if their answer is yes, then I tell them, I want you to pay that because I want to potentially do an FHA streamline for you as soon as possible. Okay. And so that's a great way for me to show them, if they do this and they're able to pay this down, maybe we can look at a streamline. I always say maybe, because I have no idea where rates will be. I have no idea where the market will be, but I want them to understand it could potentially be something to help them later. Imagine that one and that would have done it 3 years ago, they would already be maybe not even streamlining. They might be conventional now with no mortgage insurance at all. So we want to make sure that that's what it is. One of the things, and I see some questions, who's it for? How this will be different than most down payment assistance is you can have not owned a home 24 hours. So you might have owned a home yesterday, but you don't own it today. You qualify for this program. Okay. Maybe you sold your home and you didn't receive anything for it, right? By the time you paid an agent commission or whatever you owed on it, you only had a few $1,000s, and maybe this program, you still need this program for whatever reason. So as long as you haven't owned a home in the last day or currently own a home today, then you're going to qualify versus the 3-year wait that most people have. Okay. Let me see. What would the income limit on Chenoa? They do not have an income limit. That's one of the great things I love about it. There are some additional reserves that they make a lot of money. And again, $100,000 sounds like a lot, but again, I just paid $10 for eggs. So is it really? I never thought I paid $10 for eggs. There isn't. Okay. There also isn't necessarily limits. Now, I say this, could it change tomorrow? It could change tomorrow. So once your client is approved for this program, I let them know that, right? Interest rates, you're only locking in this rate once you have a contract. When you have a contract, then you can lock in. Okay. So it's for anybody looking to purchase, and it could be two individuals together, as long as they understand it's owner occupied only. That's what this program is for, owner occupied. Okay. It is not for investment purposes. So any questions on Chenoa? We had a couple, they were great. I do a lot of these. I help a lot of people with these. And yes, when you're filling out the FHA addendum, you're going to list the first mortgage on there. You will list the second mortgage on there, and the seller is aware that they're getting 101.5% financing, right? But that, when I pick up the phone and talk to that agent, I let them know this is a good thing. We don't have to worry about, do they have the down payment? They already have the down payment. We've got it. We're good to go. And so it actually relieves their fears. Okay. And if seller's paying closing costs, just like VA, right out the window. It's going to take a lot to stop that from closing. It's closing. Do they take a little longer? They do. That would be probably my only negative next to the interest rate. Probably 40 days. But again, when I'm talking to your person about this, we're not necessarily looking at the house on the market one day. We're taking a look at that house that's like, 3 weeks, 4 weeks. That's what we're trying to look at. So if you have any questions on this, please let me know. So one of the things I want to send to you guys that I want to talk about real quick is what's going on in the market. Okay. I'm getting so many calls, and I have a cheat sheet for you. So if you text me, my phone number, I think is on there, probably somewhere. If you text me or email me, I'll send it to you. It's a great, 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 great article. Absolutely loves it. Makes it super easy. And what am I talking about? It's all over the news, TikTok, Instagram, everywhere. And some of the information is just isn't correct. That's my nice way of putting it. But we're talking about, I got a call yesterday. Hey, my 800 borrower is going to have to pay a higher interest rate than my 640 borrower. This isn't making any sense to me. Why are you doing this? First off, we're not doing it. We do not control Fannie Mae and Freddie Mac and what they're going to be charging in fees. Okay. But no, they're not paying a higher interest rate. Okay. And what I do want to preface with this, if your borrower is 620, 640, 660, even with these changes, FHA is probably, I'm going to go almost rock solid hard, going to be a better program for them, right? And we don't want to just look at just conventional. Now there will be reasons you'll say, Tamara, I'm buying this condo, I can only be conventional. Hey, Tamara, there's got this issue with it, I can only be conventional. Hence why sometimes you get two pre-approvals, an FHA approval and a conventional approval. But if FHA is better and it's solid that it's better, even with the 3% AMI conventional loan that we have, then we're going to go with FHA. But these premiums, did they raise them for great credit versus raise that, for lower credit scores? The answer is they did. And the answer most people don't know is they did this back in January. It's just now causing all kinds of havoc, right? Because someone got a hold of it and then it went viral. And it is like this big of a box of who is being affected. They are being affected. So when I go take a look at somebody who might have a 700 or 720, and I might have said conventional was better for them at one point, I might now be saying, hey, FHA is now better for them. Let's take a look at that and see, because not only would it be better because of these LLPAs, which again, you want the charts, email me, text me, the chart will go out to you today. But why would that be better? Because the mortgage insurance on FHA dropped. I never thought I'd see that in the entire time I've been doing this. It used to be a 0.85 factor for the year, and now it is a 0.55 factor. Well, and we would sit there and put someone into conventional because maybe their mortgage insurance was 0.65, or maybe it was 0.7, or maybe it was 0.55. Well, now you're matching FHA, and FHA is going to give you a better rate. We shouldn't discourage them from using FHA. And again, maybe not the property one day on the market, but the property a week or more. Sure. those times are changing as we head towards the seller's market for the summer. Maybe not so much, but sending out 2 approvals because one's going to be better, we should look at. But it is not to the rate. A lot of people are saying I'm going to be charged 1.75 higher in my interest rate, or I'm going to have to pay a higher rate because I'm 800 versus I'm going to have to pay I get a lower interest rate because I'm 640. That's not the case. It's just not the case. Now, they are getting better we call them LLPAs, loan level pricing adjustments. They are getting a better pricing adjustments for the lower credit tiers, but even with those, sometimes they're still going to be better off FHA. And so we want to take a look at what's the best situation. And this is hurting or hitting, I shouldn't say hurting, well, maybe, it's hitting more the people who are falling between 80 and 95. But once like 94.9, 95 and higher, it's not hitting those individuals. It is hitting the more down payment individuals. So sometimes I might look at it and say, hey, I know you wanted to put down 8%, but if we put down only 5%, we could get a better situation, which is crazy to say. But if you have a great loan officer that you're working with, they're doing that. They're going to take a look at the overall picture and not just the little situation of, oh, you told me 8, then that's all I'm going to put in there and that's all I'm going to look at. You really want to have that conversation with them. So again, if you want this, I'm happy to send it to you and get this out to you. I missed a question. Did the payback time used to be 5 years? And if you sell before 10 years, they will prorate the remaining balance, correct? I haven't seen 5 years at all on Chenoa. So she's referencing Chenoa. Thank you for the email. I mean, the question. It's been 10 years for a long time, quite some time for 10 years. But I recommend paying early so that we could get out of it. Where Georgia Dream or any other program, as soon as you refinance, which by the way, we might see some of that happening again in less than a year. So those individuals will have to pay those funds if they ended up receiving them. They're going to have to pay them. So any questions or answers? This chart is really great. Not only that, it's got a great breakdown of kind of what I was talking about. So I want to make sure any questions you might have, please feel free to ask. I want to make sure I'm getting them all answered for you, as well as if you would like this chart, I'm going to get it out to you. I always send, try to get you guys something. And as a reminder, we do pre-approvals and same day approvals and fast tracks. What does that mean? If you're still here, I'm going to take a really quick story. Not a story, actually has happened. I literally had one where I didn't need an appraisal and we cleared to close that loan in 3 days. I have another one that's going to clear to close today and it'll be 4 days. No, they don't all fall into that. But if they're putting large down payments, then they may very well get clear to closes in 3 or 4 days. Our fast track system is here to basically get that individual. They're trying with everything in their power to clear to close that customer in 10 days. That's our goal, 10 days for that. So if you have a customer and you're going up against other bidders, you probably know that they're fast track or not. I put it right in my approval. Hey, this one's looking like a fast track. And so you know in advance that that's the case because you go and you can say, I'm going to get a clear to close in 3 to 10 days. That makes a huge difference for you. And then of course we're waiting 10 days to close. So I have one that got cleared to close in 3 days and then we just sat there for 2 weeks waiting. But I also wanted to let you know when I pick up the phone call, the phone to make phone calls to selling agents, they recognize us, right? They're recognizing our brand. A lot of them know about our technology. They know about how we're trained. And some of you know because I'll be like, I'm in a class, right? Because I think we take something like 40 classes a year. So it's good. It keeps us up to speed so I can give you webinars like this so that you can get all the information you need. So I just want to say thank you so much. I appreciate you coming up and listening to me today. I hope you got something out of it, just one little piece. But if you need to reach me, you've got my phone number, 770-916-1234, 770-896-5001. But hopefully I'm just saved in your phone already and you're pressing Tamara. But again, if you need any information, please let me know. Happy to help. I'm going to stay on for about another minute or so, just in case someone has another question. I want to make sure I'm getting it answered. I hope everybody has an amazing rest of the year, because we're already in May. How did that happen? Oh, May 2024. All right. Thanks, guys. I appreciate it. Thank you.